So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. Guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and today I'm joined by Lennon Lee. Born and raised in Venezuela, moved to the US in 2010. He's a full-time real estate investor, founder of Passivo REI, a private equity investment firm focused on multifamily real estate investments, host of Se Habla Real Estate, the first ever podcast in Spanish focused on discovering the secrets to success in real estate investing in the US, limited partner and general partner in 200 million plus worth of real estate, and has raised 7 million plus in private capital. Lennon, welcome to the show.
Thank you. Thank you for having me, man. That's
absolutely.
That bio sounds nice, man. Once you hear someone else tell it, sounds impressive. So yeah, good for us.
Anytime you're upwards of over 100 million in assets, it sounds really nice when someone says it for you.
It does. It does.
Awesome. So we were kind of talking offline. You obviously have a pretty cool story. So let's kind of get into it, kind of rewind here. Came to the US in 2010. What were your goals then, and what led you into real estate?
Yeah, good question. So my goals had not to do with real estate when I first came here, actually. So I came here to do my master's in engineering management, and then I worked on supply chain and logistics for this company for a couple of years before quitting and trying to become an entrepreneur and try to do something on my own, which ended up being real estate. But also during that time, I was involved in real estate a little bit, managing my family's properties that we had bought here in the United States, mostly condos, a small piece of land, some single family, but mostly condos in Miami. And I did do basically the property management for those properties for a few years. But it was never like my thing. I was just doing it, just basically as a favor for the family and everything. But I never saw myself as a real estate investor, which is weird. Like we never thought about ourselves. Like we just own a few properties and that's it. But like the title real estate investor didn't really cross my mind at that point. But ultimately, yeah. So I went to school, graduated, went to work for a little bit, and ultimately I realized I didn't want to go the corporate route. It wasn't for me. And ultimately, I was looking for some options. At that time, around 2015, our properties had appreciated a lot. Cash flow wasn't as attractive, really, at that point. So I decided, I told my family, listen, I think we got to find something else. First of all, something that's a little bit more passive, less headaches and less everything. And then also that brings us a little bit more, obviously better returns, right? Let's try to grow this a little bit in a more efficient way and a more aggressive way as well. So I started looking around and ended up investing in multifamily real estate through a sponsor that we met out of New York. And from then on, I then started partnering up with them, started being active on these deals, managing deals, doing deals, raising capital, the whole thing until this point right now. We've been investing for a few years now with my family and also with a bunch of investors that have placed their trust in what we do and our deals. So here we are.
Awesome. I love that. That's such a great story. So pretty common. You started potentially seeking it out as a passive investment and then realized you actually really enjoyed this. And here you are now on the active side. Is that kind of how that went?
100%. Definitely. Again, it started as a passive thing for the family and that's it. And once I started deploying this capital and talking to these, operators, people that were actually putting the deals together, understanding the not only the whole business model for us as investors, but how they were making money as well. I figured, well, I think this is exactly what I want to do for a living. So I that's how I started, and then build my company around that model. Obviously, it's a little bit different now than what it was when I got started, but same general perspective in terms of just trying to build something where we are able to build a legacy, and that it's something that is long term, and that this is something that I always tell the story because it's funny and it stuck with me, and something that I can do where losing money, it's very hard to do. It's definitely possible. It might happen like in my lifetime, like I'm sure it's gonna happen. Some project here and there might fail, whatever. I'm not blind to that, but ultimately my mom once told me, hey, okay, you identify this group, you identify this asset class, do you think this is the best for us? We'll trust you, let's do it. The only thing is just don't lose my money, right? Like, I don't really care if it grows that much, if it we want cash flow for sure. We want the money to work for us, but just listen, don't lose the money, okay? So I've always had that in mind, and I think I'm building a business, of course, with my partner, where we do just that, right? We invest in something that it's very hard to lose money, something that cash flows, which for us is very important for our investors, and also something that where that money can grow and grow over the years. If you do it long term enough, you'll be able to leave that legacy to your family if you want to. So that's really it.
I love that. That's awesome. And I think it was Warren Buffett who said, just don't lose money, or he said like best investors just don't lose money. So I butchered that for sure, but he has something.
Yeah. First rule is don't lose money. And then the second rule, remember rule number one. Some people put it that way as well.
Yeah,
but
exactly.
Yeah. That's a big deal. That's a big thing for us.
Absolutely. So let's kind of get into it now. Obviously you kind of alluded to your investment thesis has changed kind of over the years. So what markets are you in now? Kind of what is your investment thesis moving forward?
What has changed is not really the overall thesis, but more like not even the strategy. We'll call the model that we use, but that's internally for our company. For our investors, the product, if you want to call it that, really it's still the same. And ultimately, we're buying apartment complexes. These are workforce housing apartment complexes that tend to be, they're not necessarily qualify as affordable housing in terms of like legally, in terms of like the way the state or the government would see it. But it is really affordable housing, or again, like a better name for it's workforce housing. We're talking about Class B assets, and these apartment complexes are businesses that are already up and going and might be underperforming, but they are healthy businesses when we buy them. And then our model is just to go in and operate it and in a better way. So optimize operations, try to make the business run smoother, and then of course try to increase revenue, which we do by increasing rents and implementing different strategies. So it's pretty much that, right? And then ultimately we're buying these properties and we're building and we're creating a company to buy each one of these assets. And out of that company, we offer investors the opportunity to buy shares, let's say, of that company. And we're all partners in this deal. That's really the most easiest way to look at it. Of course, it's a little bit more complicated, but that's the easy way to see it. Yeah.
Absolutely. Makes perfect sense. So kind of talk about, obviously, like you mentioned, it is technically workforce, kind of that Class C range, right? Where rents are probably $750 to $950, somewhere in there. Probably acquiring them below that, able to bring them up. Are you finding that by going in and creating a better living space for your tenants or for the residents, that a lot of them are staying despite the increase in rent, or are you typically having to kind of do a whole new lease up period?
Both. Yeah, both. It depends on the property and the market as well. I mean, it's always project specific, right? But I guess I'll say a little bit of both. We sometimes, I mean, the plan is yes, right? If we're buying this property, and if it's like a reposition play where we're trying to have this asset appeal to a better, higher paying or higher income tenant base, then yeah, you're going to see a lot of the tenants, they just don't value what you are offering them in exchange for that increase in rent, right? Like maybe you're saying, okay, you're going to have this smart AC controller, or some of them, they don't care. Like they just want to pay less. Well, then that's not our ideal tenant, right? Like we want to build a community with tenants that are going to see value in what we're offering them, because if there's no exchange of value, then one party is not going to be happy, and then problems start from there, right? So yeah, a lot of the times when we do renovations, or when we add this amenity to the property, or we make it look nicer, etc., we do want people to value that, and then of course they're going to pay a little bit higher rent for that, right? So yeah, most of them, I mean, no, I wouldn't say most of them. A lot of them leave, but we have a lot of them also stay. I don't know if it's 50-50, probably 20% of them end up staying. I would say more like maybe, yeah, let's say 30. I think is a good number. And those are the tenants that actually are the most valuable for us, because they are tenants that have lived there before, and they are the ones that are able to communicate that to the new tenants, and their joy, the way their sense of ownership, because they're old tenants there, that conversation actually it's pretty good with the new tenants. So yeah, man, I mean, ultimately we try to have them stay if they can, and we have negotiations with them, with a lot of them anyway, depending on how long they've been living in the property and here and there. But yeah, but if it's a reposition play, then we do want to bring new tenants and upgrade the whole experience for everyone.
Absolutely. Yeah. I mean, that makes perfect sense, right? Like you kind of mentioned, deal by deal. Obviously, as many, for the most part, when people can stay, that helps a ton, right? Because that's, less time between tenants and turnover time.
Yeah, that's going to be a lot of people don't pay attention to that. And of course, there's different business plans and different risk profiles for different projects. But that's one of the big ones, right? If you don't pay attention to that, and if you don't do it, if you're not thoughtful about, okay, how long are we gonna have these units not rented? Do we really want to turn them over all at once? Do we have to? Is that the plan? Is the financing in place to do just that? Like it's a big deal. So yeah, I mean, ideally you don't want people leaving. You want to be as occupied as possible to keep cash flow up. So balancing the whole thing, it's kind of like the tricky part.
Absolutely. And are you guys integrated? Do you do in-house property management, or do you do third party?
Yeah. So, well, we do both. And here's why, right? And I was mentioned before, our business model has changed a bit since I got started. When I got started as a regular syndication company, looking for my deals, trying to raise all the capital, doing everything on my own and when I say on my own, under my company, which is perfectly fine. And it's kind of like the way most investment companies in general work. We right now are not doing that. What we do is we are basically building relationships and partnerships with other operators, right? So ultimately, we do have operational experience. We do have asset management experience and capital raising experience, of course. So we are looking at it as if we were passive investors, which is what we are first and foremost. So as a passive investor, I think if you want to build wealth in real estate, again, as this is on the passive side, like truly passive. I'm not talking about, building your own portfolio of single families and doing the management your own. That can be a little bit passive, but not really.
Right.
That's a whole different conversation. So yeah, as a true passive investor, ultimately what you're doing is you're trying to identify people that you can deploy your capital with, people that you trust, companies that have a track record and have a good team behind them to execute a business plan. And then the successful execution of this business plan is what's gonna make you a profit. And it's not in your hands. It's definitely not in your control. So ultimately, you need to have a good understanding of what the asset class is, how the market or what markets you wanna be in, but also who is the team behind executing the business plan for a specific project. Well, at the end of the day, if you have the same team behind all the projects that you're involved, I mean, it's not necessarily bad, but you could do better. You could diversify across different teams. And that way, one of the highest risk, the execution risk, you kind of diversify across that one as well. And a lot of people don't see it that way. But to be a successful passive investor long-term enough, you have to build those relationships. So what we are doing right now is we are taking the time and making the effort so that our investors eventually don't have to, because a lot of them don't have the time or the interest or the knowledge to do it at the level that we are doing it. So what we're building is a network of the best operating partners that we know in the business. And they identify an opportunity in let's say whatever, Dallas or Jacksonville, Florida, North Carolina, wherever. They bring it to us. We analyze it. We give it give it our stamp of approval and say, okay, this is a good deal for us, for all of us. Let's partner up. At that point, we put it in front of our investors. So I guess that's the long answer to your question, because ultimately, some of these operators that we work with are vertically integrated and have in-house management, and some of them, and some of the projects we just use third-party management. So yeah.
Okay, makes perfect sense. And you touched on a really great point there that I love is by the time your investors are seeing the deal, it's already gone through a due diligence process, your guys' due diligence process. So it's not like, oh, hey, here's this deal, you guys, and obviously, we always are encouraging our investors to look over the deal themselves and make an informed decision on their own. Yeah. But ultimately, our job, is to bring them a deal. And by the time it's in front of their face, it's sort of had that initial due diligence. So kind of talk about your guys' due diligence process in terms of, vetting a sponsor and, what you're looking for in a deal.
Yeah. So yeah, that's the big one, right? Betting the sponsor and building that relationship so that eventually, and you're always going to have like the basics in place, meaning when it comes to, let's say, sponsor vetting, right? Or okay, how do I know if this is a good sponsor? Listen, on paper, everybody can look great, right? And not only that, but most of the ones that look good on paper are actually good operators, are actually successful syndicators, operators, however you want to call them, and they've killed it. Nice, but that's not really the question. The question is, do I want to invest with them, right? Not if they're good or bad operators. There's thousands and maybe, I don't know, thousands of them out there, but there's only a few that I'm sure that you would love to build a long-term relationship with. So identifying that few goes beyond the metrics or a clean background check, or I called 3 referrals that they gave me and they said these guys are great. That's always going to be, almost always anyway, right? It's going to be the easy part, right? So that's to say that we focus a lot on personal relationships and just making sure that we're doing business with people that we enjoy doing business with, and that ultimately means for us a few different things. Of course, obviously the way, communication and transparency, it's a big one. Obviously, you start seeing red flags when they don't want to share a certain type of information with you, or this or that. So, it comes with time. But also on the personal side, like we like to go and meet with them in person, or maybe we've met with them in the past, and just, okay, how to, maybe go to dinner. How do they treat the waitress? How do they treat, maybe they came with their family, like how do they treat their kids, or their whoever, their family, whoever it's around them. That says a lot about a person, right? Because like we you and I know, like ultimately all the legal and paperwork and all the on paper stuff goes out the window when things are going wrong. Or I mean, not necessarily goes out the window, because the legal actually comes in the window once that things go wrong. That's when you actually look at the legal paperwork and whatnot. But that's there. That's always going to be there if you have the right attorney, if you do things right. But that should be again the easy part. But then dealing with a hard situation with a partner that you don't trust, a partner that you don't like to do business with, or you don't even like to talk on the phone. I don't want to be in that relationship, even if it's for a 1-year investment, and even if it's like a 30%, whatever crazy high return that they offer. It's just not worth it. But that's us, and that's the way we look at our relationship building with sponsors. It's not for everyone. So I guess people just have to understand exactly what they like and what priorities they have. If it's higher return at the expense of a not so seamless or good conversation on the phone, or I don't, it depends. But that's the way we look at it on the relationship and on the sponsor vetting side, which is, and again, we have a big list of things that we like to look at, right? In terms of the way they offer the legal paperwork they use, the professional CPAs, attorneys that they're using when they do deals, how much capital they've raised before, if it's a one-man show, or if it's like a 3-man show. That tells you, gives you a little bit of understanding of what's going to happen, or who's going to take charge when this person's not in the picture, or if it's, so there's a bunch of things obviously that we do, but I just always like to focus on the personal side a lot.
I love that. Yeah, you touched on a lot of really great points. Kind of in the beginning, where obviously, anyone can make a pro forma look how they want. Anytime you ask for referrals, they're not going to be like, yeah, these are 3 people that'll never do a deal with us again.
Right.
So, and so you have to get past that. You made a really great point, going to dinner with them. How do they treat their family? The way they're just like observing them as a person and making sure that, your core values align is so important, because, again, you can really make yourself on paper look however you want.
Yeah. It's the only thing that matters, man, to be honest, because, and then again, that's what's valuable and what's important to me, and it seems like you think the same way, but a lot of people don't, which is fine. There's no right or wrong, but to me it's the only thing that matters, right? Because if I trust you enough, I know you have good values, I know you're like, you have integrity, and ultimately I trust that you did the best that you could do. Maybe something you could have done better, but when you identify what happened and you communicated it, to the investors or to me, and say, okay, this is what happened, dude, but whatever, this is the way I'm going to take care of it next time. And this is how we're going to get our money back. And this is a structure to repay you your money if I lost your money, this and that. Like, that's all that matters. I'm going to do 1,000 deals with you. And maybe 900 they're not going to go super successful, but it doesn't matter. I'm doing business, and I know the risks involved, and I'm doing business with people that I enjoy doing business with, and when we're successful, even better, because you get to share that moment with that person, and that with those partners that you enjoy and that you like, and that you eventually even love, right? Because you do build relationships that go beyond the business side of things sometimes. And I think that's also part of the beautiful thing.
Absolutely. Yeah, I completely agree. And even taking that down, like you mentioned, to the investor level, that transparency, right? Like, sophisticated investors, are going to understand there's risk involved, right? And even if it's a brand new investor, right?
Yeah.
Our job is to educate them and help them understand that, listen, this is not guaranteed. There are risks involved. And so if things do go wrong, just that full transparency of, hey, listen, this went wrong. This is why it went wrong. This is what we're going to do to correct it, goes so much farther than, like trying to hide it and then be like, okay, well, we're going to get you your money back. Don't worry. Those are the things that really stand out and make you stand out. So let's kind of get down to the investor level. You obviously, are tapped into the Hispanic network and things like that. You've got your Spanish podcast. So kind of talk about that as a niche. Is that been like a really great network you've been able to tap into and kind of go from there?
Yes. Yeah, for sure. And it's a network that, and I've been saying this for a while, and haven't really gone blasting as I probably should have at this point. But it's the plan. Yeah, it's part of the plan. It's what we're working on right now. Try to continue to build our internal structure. That's part of the reason why we brought the podcast Se Habla Real Estate. We brought it under Passivo now. So basically, Se Habla Real Estate can become our content creation and educational arm for our Hispanic network of investors. And yeah, so we're working on that. I think it's an untapped market. It has a lot of hurdles in terms of what people can how can they invest in our in US real estate, the legalities and then the accounting issues and tax issues that might arise if they do it in a certain way versus another, etc. So it can get complicated, but also not really, right? There's ways to do it where it's where we make it easy for them. So yeah, I mean, I don't know, it's an on-top market. We're very excited to continue to explore it. I'm from Venezuela, originally born and raised. I know how we think, and the conversation sometimes it's very interesting because it's so different what we as Latinos put a premium on versus the American investor. It's sometimes at the beginning actually it was really weird to me how, because I have a few investors that I've definitely never seen or even actually a couple that I've never talked to on the phone, nothing, like at all. And they're investors with us. I don't, and they're both American investors. I'm not sure that a Hispanic investor would do that. Right. But I don't know. It's interesting, man. And it's an interesting market. And of course it's close to my heart because at the end of the day, when we came to this country, we bought some properties here. Thankfully we bought at the right time, right after 2008. And well, I mean, we killed it. I mean, not gonna lie, but we didn't really do it with a guarantee that was going to happen. We knew it was a good time, quote unquote, and this and that, but maybe it wasn't a really good time. Maybe it was going to go down and down and down. I don't know. Or maybe if it happened a few years later, if it happened last year and we had the same knowledge, we would do the same type of investment and we probably would have been lost, right? So I'm very passionate about explaining to the Hispanic investor that their options go beyond $1 million condo in the heart of Brickell in Miami,
Right.
So, and yeah, that's the thing, right? Like, so yeah, educating them and sharing, listen, this is all the options that you have. And there's a vehicle that we use, multifamily specifically, but there's a bunch of other asset classes, right? From self-storage to offices. There's people doing business in different asset classes in different ways that are very attractive and very lucrative and safer, to be honest, than most of what we are doing with the little knowledge that we have when we come here as Hispanic families. So yeah, it's very it's very rewarding as well. So
awesome. Yeah, I love that. And you hit on something good, right? In 2010, there were a lot of, economists being like, oh, this is we're barely propped up. It's going to crash again,
yeah.
So had you kind of listened to that guidance and not invested, you wouldn't, obviously have had that success. And so that's what, a lot of people, the old adage, don't wait to buy real estate and wait, right? You can always come out of a downturn, right? You don't have to sell when you're down. And obviously we've enjoyed a really nice run. So kind of on that, pull out your crystal ball if you've got one. It's probably a little fuzzy, as all of ours are, but what are some of the things you're keeping an eye on, kind of moving forward for the next year and 2 years in terms of, the market you're in and economic indicators you guys look at?
Yeah, that's a great question, right? Because obviously no one really knows, but here's my thought on it, right? It doesn't matter. It doesn't matter, and it's hard to think that way, and it's a constant process of conversations and education with our investors, because ultimately that's what we're trying to build, a community of better investors. And that means different things, right? Like obviously better that you can be, help your community and become a better investor that way. Obviously, if you're making money, then you should probably consider sharing some of that with people that need it, and that part of things. But ultimately, just how do you become the best passive investor that you can be? Well, you need to have a team around you. Okay, who's that team? What are they going to do for you? Okay, then of course you need to educate yourself on the technical side of things, right? How to analyze a deal, how to build relationship with sponsors, and this and that. And again, like I was saying before, that takes a lot of time and effort and money, and not a lot of people are willing to do that. But at the end of the day, one of the biggest things is a long-term perspective that you need to have. If you don't have that in mind, then yeah, maybe you get lucky once and that's all you need, and you become a millionaire in Bitcoin or in real estate or wherever, where you say, well, I'm only going to get into this business for 5 years. I'm going to kill it, and that's it. Well, maybe it's the worst 5 years in history that you chose. So you did, your timing of the market wasn't that good, and you crushed. I mean, that's it, done, gone to zero. So anything that you do, you need to look at it like really long-term, right? So that's a big message that we like to share. And that's a big thing that we have, and me and my partner, right? Long-term perspective. So ultimately, if you combine that long-term perspective with the way we buy our properties, right? We try to have the right financing, the right debt, just to not put ourselves in a position where we are forced to sell the asset at the wrong time. That's really it. If we're not forced to sell, you're good. And so that combined with cash flow, even if it's little cash flow, not as attractive, that's fine. It doesn't matter. You have some cash flow, meaning you're making money, and you're not forced to sell at any time, then you're good. Then the only thing you need to have is long-term perspective, right? Because right now might not be the best time to buy, or maybe 4 or 5 years or next year, it's going to be worse. Super expensive, interest rates going up. Maybe the cap rates don't adjust up in this case, and it's going to be it's continue to be a super hot market. The returns are not there. People start looking for other options. Listen, I get it. That's fine. But we are going to continue to buy, even if it's at the expense of, these attractive double-digit returns. Maybe it goes below double digits, at least on the cash flow basis. That's fine. But the only thing that matters to us is if in 30 years from now, we look back and we are able to average what we are averaging right now, 20% for our investors every year. Listen, that couldn't be a better scenario.
No, I don't think there's a single investor out there who would be mad if you told him for the next 30 years he's going to get 20% returns.
Yeah. On average, right? Like this,
Right.
this next 5 years, there's going to be 9 or 10.
Right.
But then we have we had like 4 or 5 years ago, we were looking at 30, 35% yearly returns all day. That's gonna happen. Maybe not again exactly like that, but kind of, right? Like it's always a cycle, and it's always gonna go up, but cycling. So, yeah, man. I mean that's my crystal ball right there. Just continue to invest, always be in the market, and understand that it's a cycle. And then the only thing that you need to be thoughtful of is, am I doing this long term enough? And am I putting myself in a position where I don't lose my money, which is something that's cash flowing, bro, something that I'm not going to be forced to sell at the wrong moment in time, or then I'm good. I'm good. You know, that you're always going to be okay.
Absolutely. Absolutely. That long-term mindset is so huge. You see a lot of, and listen, right, there are certain markets where a short-term play is feasible and, you know, is happening, right? You're seeing, you know, 12, 18 month turnarounds in places like Austin and Phoenix and that, but ultimately if those were your first couple deals, then, you know, like hopefully you're aware that that doesn't last, and you are taking on that 3-5 year, even 7 year plus mindset of like, you know, hey, we might have to hold on to this thing, but as long as your debt's set up correctly and you're, you know, executing your business plan, you're going to be just fine, right? Even if you have to go a little longer than you anticipated.
And it's fine. Like if you're going to do something and not with a short-term mindset, it's 100% fine. If you're opportunistic and then maybe you got into Bitcoin at the right time and then you went in and out, or in real estate, there's a tons of ways that you can do short-term investment strategies that are super successful, proven, I don't know how many times. Amazing. Go for it. It's just understand the risk profile. So yeah, I'm getting 30% per year or 40% per year, 50, whatever. Okay, that's not happening if you have the same risk profile that we have. That's the only thing. Okay, good for you, but it's a higher risk. So there's this thing called a Sharpe ratio that actually takes into account the returns plus the volatility of the investment or the risk profile, and it gives you a number. That's when you can compare apples to apples, right? If not, then you're just comparing two different things. No one can tell you what's right or wrong, because it's about where I am in my career, in my life in general. What are my goals? What's important to me? Is it time? Is it maximizing profits? What is it? There's no right answer or wrong answer either, you know? So, you know, that people need to think about it that way a little bit more. They just a lot of investors try to just focus on the actual number. Okay, how much am I going to get this year? Well, it's not as simple.
Right. And that's why it's important to align your values with your investors so that all of that is aligned, and there's no confusion about why, you know, your investment strategy may not align with theirs, because you've already gotten that out of the way. Awesome. Well, listen, we unfortunately are running up against time. I know we could talk about this forever. I've appreciated the time very much, but I do have 5 questions that I ask all of my guests. It's the final 5, so we'll get into those. The first question is, what's the best advice you've gotten from a mentor?
The best advice I've gotten from a mentor. That's a big one. That's one that I actually try to tell myself every day, because I forget it almost every day. And it's just believe in yourself, and yeah, just believe in yourself, man. Especially in this business, and especially when you're raising capital, you know, you have these people put their lives, some of them, their life savings in your hands, and it's a big responsibility. Sometimes a lot of times you can feel like you're not worth it of being the steward of that capital and everything, and it's a big burden. So yeah.
Yeah, that's the
It
truth.
sounds cliche, but it's a good advice, man. It's just and that means for different people means a little bit, you know, different things, right? Like believe in myself. How do I do that? Well, there's different ways. Like to me, meditating helps a lot, and reading and this and that, but that's, I guess I digress.
Totally. No, I mean, I still struggle with imposter syndrome, like interviewing someone, I had the guys from passiveinvesting.com, and they already have $1 billion portfolio, and their goal is to acquire another $1 billion this year alone.
Yeah.
And I'm over here like, I'm probably going to raise a couple $1 million this year.
Right.
Yeah. So it's like, but listen, like they started out the same way. And that's what you need to understand is like, everybody started at zero, at nothing. Right. And maybe some people worked for someone or, worked for a big company that was in this field, but ultimately everybody started out having to go to their friends and family to raise money and building their credibility. So that's really, for me at least, where I remind myself.
Yeah.
What is it about your career that makes you feel like you're fulfilling your why?
So yeah, well, helping people, well, let's put it this way, giving people and families their time back so that they can honestly do whatever they want. I don't care. I mean, that's gonna be different for everyone, but yeah, man, I think we offer them an opportunity to join us on this thing that we're building for our own families and for ourselves as individuals also, and it's like it is a good opportunity for a lot of them. So it's really rewarding when we click with someone that's like, oh man, thank you, bro. Like, this is what I was looking for. Especially when obviously when they start seeing the returns and everything, that's obviously gets a little bit more attractive. But just the fact that they were looking for a vehicle to, preserve their money and grow it and be able to live off it, even, a certain point, then, yeah, that just feels pretty good.
Awesome. Yeah. I love that. It's so true. What's your favorite non-real estate or investment related book?
I would say Musashi. It's a fiction book. It's a 400 pages, something like that.
Oh, wow.
Huge one. But yeah, it's about this samurai called Musashi, and it's just a story of resilience and humility and I don't know, dude. It's just they were built different in that time. This is a fiction story, but still, they were built so different at that time that it reminds me of how weak, even, I mean, I don't know if that's the right word, but yeah, maybe that's the right word. How weak we sometimes are as men, as society, nowadays, that we have everything going for us. Which is weird, right? Because it should probably be the other way around. If we're appreciative and we have gratitude, shouldn't be that way. But I don't know, man. It's a great book.
I love that. No, that's awesome. We don't get too many fiction responses to that, so I like that a lot. If you could have any superpower, what would it be?
Oh, teletransportation.
Didn't even hesitate. I love it.
No, because that's the one that I've been since I was a kid. I'm always praying that, oh man, God, please let me see this. Like, before I die, I just want to, because I'm so impatient. Like, if I'm going to a party or to a meeting or whatever, when I leave home, I just want to be there right now, So yeah, teletransportation would be pretty cool.
I love that. That's awesome. And last one, what's the best way for people to get a hold of you and learn more?
Well, I mean, I guess we can share a link to my Calendly here. People can set up an intro call with me, and obviously we can do that. I'll send it to you. Or just get into our list by downloading our book called The 4 Real Estate Investing Rules for the New American Dream. You can just go to passivorei.com/dream and just fill out the form. You'll get the book. It talks about our investment philosophy in general. I think it's a pretty good one. And from then, obviously, we'll be in touch with you.
Awesome. Yeah, we will link the website in the show notes. Lennon, thank you so much. This has been incredible. I've really enjoyed this conversation.
Thank you, my man.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.